Hello my friends, welcome to another video. This time we're going to talk about AMC with two ticker symbols, AMC and APE. AMC is one of the so-called meme stocks that became famous with GameStop. AMC runs a theater business, but that seems to be besides the point with this stock. So join me as we explore this marvel of a company. AMC, the theater company. This will be a fun stock to explore. Now before I continue, may I ask you to subscribe? It's free and why not? It seems to me that in the past 2 years, as with all the meme stocks, the price of AMC stock has been completely dislocated from the performance of the company. But before we get into the charts and the earning numbers, let's first have a look at this company because it's a strange one. AMC Entertainment Holdings, or American Multi-Cinema, is the largest movie theater chain in the world. It has 2,807 screens in Europe and 7,755 screens in the United States. So we can safely say it's a major player in the entertainment industry and more specific in the movie industry. And it is this power that AMC likes to play out. When in April of 2020, during the pandemic, Universal Pictures announced it wanted to release films via on-demand services, simultaneously with theatrical releases, AMC announced promptly they would no longer carry films from Universal Pictures. AMC also threatened that this would also be done with any other studio that thinks about going the same route. We can see here that when AMC was already fighting for its survival during the pandemic, it didn't shy of showing its teeth to those who would threaten their existence even more. During the pandemic, AMC gave numerous statements that it would run out of money by the end of the year, and showed substantial doubt that it would remain in business. At the end of January 2021, AMC announced it raised new funding via equity and new common shares, and commitments for in-depth financing. The day after, the meme stock rally began. Coordinated by the Reddit community, wallstreetbets, AMC experienced a major 300% surge in its share price, triggering a first short squeeze of $20. In June 2021, retail investors poured into AMC stock once again, making it reach an all-time high of $70. AMC saw this as an opportunity, and rightfully so, and issued more shares hoping to bank on this new crazy high valuation. But they also warned potential investors against buying these new shares, unless you are prepared to incur the risk of losing all or a substantial portion of your investment. And right they were, because while the theaters had been shut down almost completely during the pandemic, the stock soared more than 2,000%. And opportunistic they stayed at AMC. In August 2021, with Bitcoin prices being very high, they announced they would adopt Bitcoin for purchases in the future, which they eventually did. And then again this year in August, they made a surprise announcement, again showing their willingness to get creative in raising money, by any means necessary, as long as it would keep the company going. They announced the APE special dividend. With the name, they embraced the fact that they were a meme stock, because the meme stock investors often refer to themselves as apes or ape nation. Existing shareholders will receive one ape share for each common AMC stock that they own. They did this because AMC had no more shares to share, because remember, they sold them all during the pandemic to stay alive, and when people were willing to pay them for crazy prices. They proposed investors to create new AMC stocks, but they, fearing dilution, rejected the company's efforts to issue additional stock. So the AMC management did what they always seem to do, is get creative to get the funds one way or the other. They just made this new kind of stock, gave every current shareholder one of these stocks, and made everybody happy. They offered 517 million APE shares, but kept 4.5 billion shares for themselves, that it could sell to raise additional funds. Basically, they printed their own money, and I love it. This allowed them to come out with the news last week that they were selling 100 million in apes to the hedge funds Antara Capital in order to raise more money. It would also raise an additional 100 million of AMC debt into 91 million ape units. So basically, they were paying with their own printed money. The finance world is a crazy place, my friends, but anything goes, it seems. Also, they announced a 1-for-10 reverse stock split. For every 10 AMC stocks you own, you get one new one at 10 times the price, hoping to make the stock more interesting for investors. So again, AMC not shying away from doing some creative stuff. I gotta say, when looking back on how AMC traversed their difficult and hard times, I can only respect the management for doing really everything in their power to raise money and keep the company afloat. I think a lot of other companies would have wavered into such a storm, but they kept coming up with ways to survive, and they have my deepest respect for that. But of course, we are here because we want to know if the stock is a good investment. For the sake of making this a bit easy, I will only look at the AMC financial page. The APE page is exactly the same since this is the same company, but let's forget about APE for now. Let's first have a look at the revenue. So from right to left, from 2018 until the current year, we see that in pre-pandemic years, they had a steady revenue of about $5.5 billion. Pandemic years are of course butchered, and we see that this year they are almost back at the levels they were before the pandemic. Now let's have a look at their profit or loss. It seems they are again writing in black figures for their EBITDA numbers, but of course not yet in pre-pandemic ways. And if they would get back to pre-pandemic ways, they on average would get about 800 million EBITDA every year. Of course, the net loss is still there. If we just look at the net loss, we see that the company hardly made any money over the years. Now let's have a look at the quarterly figures to cover all our bases. Even though I don't feel that in this company, which is very dependent on third-party releases and cyclical schedules, it is a very good indicator, but it may show us some new insights. Let's have a look. So we see some revenue ups and downs, but like I said, it is as to be expected. Profits and losses aren't fantastic, but it seems it needs just a little bit more revenue to get back into the same pandemic profit figures. I would assume they will be able to execute this starting next year. Is what I would say if the company didn't carry a very heavy ball and chain with it, a $5 billion in debt with annual interest expenses at nearly more than $350 million. This debt they cannot solve with their APE money, so they will need to turn in more profit or find other ways to fund their operations. Now, do I think this company is a buy after looking at these numbers? Well, I still have to look at one more number, the market cap. $2 billion on AMC stock. And if you look at APE, it's even almost $5 billion. Imagine you can buy a house for $1 million. You might be able to turn a profit renting it out, but you have no idea of knowing. And you get a debt of $1 million with the house. Would you buy it? I would highly discourage you from buying any AMC stock, only if you are willing to lose some money like a lottery game, hoping that Wall Street Bet comes back alive and gives AMC another run. But other than that, I would very strongly advise against it. There are so many beautiful, well-run companies out there that grow and make a profit. Why would you put your own hard-earned money into a company like this? So there you have it, my friends, my take on AMC. What do you think? Will anybody still talk about this stock in 5 years, or do you think it will surpass its meme stock status? Let me know in the comment section down below. If you enjoyed this video, please subscribe and hit that bell icon for more related content. And don't forget to drop a like. Catch you next time. See ya.